Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers, and I know what you're thinking. One half, where is the other Kwok brother? Well, Sam is doing some very, very important business activities at this moment.
Hey Sam, what are you doing?
Nothing.
Are you listening to Let It Go? Are you watching
no.
Frozen? What's wrong with you?
I just can't. It's just stuck in my head.
So because Sam's a little preoccupied, I'm going to be sharing with you guys in this video the top 3 myths that I'm seeing media outlets all across the board talk about in the housing market. And I'm going to debunk those myths for you because you, my friends, deserve to know the truth. Now, with that said, guys, let's go ahead and debunk the myth that the like and dislike ratio does not actually affect the YouTube algorithm by clicking on that like button. Let's start with myth number 1, which myth number 1 is that there is no housing bubble. Now, guys, obviously me classifying it as a myth would pretty much communicate to you that I believe there actually is a housing bubble. But what am I to do when the truth tellers of all truth tellers, even more honest than Abraham Lincoln himself, CNN, has said that housing demand is about to weaken? Here's why. Now, guys, it's not just CNN. I mean, there's tens and many other media outlets that's saying that there is no housing bubble. Well, in that case, let's first define what a bubble is. And no, not the Urban Dictionary definition where the example sentence is, I'm finna flip this bread and make it bubble. Unfortunately, no, it's not that. Investopedia actually defines bubble as an economic cycle that is characterized by the rapid escalation of market value, particularly in the price of assets. Now, this fast inflation is followed by a quick decrease in value or a contraction that is sometimes referred to as a bubble crash. And additionally, what I like to add is a lot of times bubbles happen because of artificial boosting that happens in particular markets, or demand is so big that's fueled by something, i.e. in 2008, the big demand housing bubble was fueled by the fact that they were giving out loans to pretty much everybody. Now, I see why a lot of media outlets are saying that there is no bubble, which, by the way, I find it so ironic because part of being in a bubble is people not believing there is an actual bubble. But if we look at the statistics in terms of the amount of artificial boosting that has happened that pushed up the housing market, we absolutely cannot deny the fact that there absolutely is a bubble. Prices have been artificially boosted by things that are not natural in the free market. For one, the Federal Reserve continues to buy $120 billion worth of not only mortgage-backed securities, but also 10-year treasuries every single month since December of last year, which, by the way, it's almost already July, which makes it 7 months that the Fed has been doing this. $120 billion every single month for 7 months. My quick math tells me that's $840 billion. And considering that the Fed balance sheet is over $8 trillion, I wouldn't say that's natural. I'd say that's more so of an artificial boost contributing towards prices going up, 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 and up. And we also can't forget about the fact that the Biden administration actually wants to make it easier for student loan borrowers to qualify for a mortgage, as we discussed in our video 2 days ago. And of course, just recently, 2 days ago, very fresh off the press, Ginnie Mae unveiled a 40-year mortgage for those individuals that are already in forbearance, meaning that they do not want houses to go back into inventory, which I'm afraid is going to push the can and kick the can further down the road. Which leads us to myth number 2 that the media is telling us, which is that there is a lack in inventory. Now, guys, the media may be right on this one. And if anything, this is the myth that actually would be subject to argument the most. I mean, look at this chart by the St. Louis Fed. I mean, it's the Fed. It possibly cannot be wrong. The oracle cannot be touched. So looking at this chart with the St. Louis Fed, we see that we saw this absolute low of 3.5 months of supply of houses in the United States in September of 2020. And we can see that historically speaking, we are at record lows for the amount of inventory. But here's the question that I have to ask. Is it possible that it's not actually the supply and the amount of homes that are for sale, but more so that these houses are flying off the shelves? And that chart by the Fed actually alludes to the velocity and the acceleration in terms of how fast these houses leave the inventory, as opposed to how many homes that are actually in the market available in inventory for individuals to buy. Interesting. Media outlets cherry picking facts to push their narrative. Haven't seen that before. As a matter of fact, if we look at this chart by Statistica, we can actually see that in 2020 and 2021, we've had more total home sales in the United States than any in the last 10 years. And 2021 actually was a record-breaking year with 7.1 million home sales in the United States compared to 2011, where it was just 4.57 million, and compared to 2019, where it was just at 6 million. So for me, I'm not really sure where the media is getting their information in terms of, well, there's record low inventories. And granted, there may have been for a time being, but updated information will actually show you that it's actually otherwise. Which leads us to myth number 3 that the media is telling us, which is that these big institutions are buying up every single house right now in this market. Now guys, recently I've seen a lot of videos about this. In particular, you, BlackRock. Now guys, I'm an advocate of small businesses and private investors, the little guys, right? Buying up the single family homes and growing their real estate portfolios as much as the next guy. I mean, I'm one of them, guys. I started from nothing and I managed to build a real estate portfolio of over $8 million by the time I was 23, 24 years old. So absolutely, I advocate for them. But this is an absolute myth that the media is telling us in terms of these big institutions like BlackRock and Blackstone and other black things that are buying up single family homes all across the board. Now, first and foremost, as I said earlier, this might be the biggest myth of them all because for one, home ownership rates in the United States have skyrocketed and they're actually back to 2006 levels. So to say that these big institutions have bought up homes, well, not a lot of people know that even with BlackRock, their big purchase of the 124 unit single family home subdivision was actually something that was intended for rents anyways. They literally built the entire subdivision for the purpose of it being rented and being sold to a big boy like BlackRock. So considering that home ownership rate is as high as it could possibly go in our economy, it's only natural that that's probably going to go down in the next 2, 3, 4, 5 years. And I'm sure then the media will use it to say, hey, oh my gosh, these big banks and investment bankers are buying up everything. We got to stop them. And secondly, big institutions buy based on yield, not residential value. Now, let me explain what that is for a second here. Imagine if you're Mr. or Mrs. Jones wanting to buy a house, and let's say you have $100,000 in down payment set, and you're wanting to get good schools for your kids, and you want great family atmosphere. Well, compare that to a big institution, let's say that owns, 5,000 single family homes. Now, let me explain to you why chances are that if there is a bidding war, if there is a competition between, this big institution and Mr. and Mrs. Jones, Mr. and Mrs. Jones is probably going to win. Because at the end of the day, this big institution with 5,000 single family homes, they have what's known as a price cap, meaning that they cannot pay any more than this particular price. Because guess what? They have investors within their portfolio that have a minimum required amount of return that they must receive every single year, not to mention management costs, not to mention performance fees, acquisition fees, you name it. These big institutions have a lot of things that they have to be wary of when making that financial decision. Whereas with Mr. and Mrs. Jones, as long as they can afford the down payment and also the monthly that they're making to their debt service, they're going to be fine paying whatever price that they want. Now, obviously, they're still going to be weary, but they're not as pressured and they're not as chained as these big institutions that are wanting to buy up homes. And well, as a matter of fact, when we actually go to the facts and figures, we actually see that in 2019, institutional operators owned only 300,000 single family homes. And guys, by the way, that's out of tens of millions of single family homes that are in the United States. And if we look at actually more recently, single family rental home companies own approximately only 0.19% of the residential real estate in the United States. I mean, imagine being riled up about 0.19%. As a matter of fact, there's not one state in our entire country that owns more than 1% of the total single-family house inventory in that state, and only 4 own more than 0.5% of the total single-family house inventory in their local state. And those 4 being Arizona, Florida, Georgia, and Nevada. If anything, I would argue that having institutional buyers in the single-family housing market is actually a good thing because they will always maintain a certain price threshold and stabilize it throughout time. I mean, think about this, guys. During a crash, when prices are at record lows, it actually opens the door for institutional buyers to buy those homes because, well, their purchase price compared to the yield that they are going to want is going to be a much more favorable ratio. So during times when housing prices are falling, they're going to be that big demand that everyone's going to need to rally prices to make sure that they don't go rock bottom, and also to protect the equity of Mr. and Mrs. Jones compared to the mortgage that they have currently. And also on the top markets, when prices are at extreme highs and the market's super hot, they're probably going to stay out of the housing market, leaving more room and leaving more supply and more inventory for the Mr. and Mrs. Jones who wants to buy a house for their family and to be able to live there for a long time. So with that, guys, let me know what you think in the comments section below. Do you think the media is to be trusted when it comes to us getting the news about the single family housing market? Or do you trust random Asian people on YouTube to tell you and inform you facts about the housing market? And also let me know, guys, in the comment section below what you guys thought about this video, and also if there's other myths that the media has told us just about the housing market. We're not gonna open the door for everything else, right? Just about the housing market. But let me know your thoughts in the comment section below. And of course, guys, don't forget to like this video and subscribe to our YouTube channel, as my brother and I always have great content on what's happening with the market, real estate investing, and also general finances in general. So with that said, guys, thank you guys so much. Have a great day. I'll see you guys in the next one.